Nothing says trust us with your money like a bank that loses it all in a magic trick of incompetence. 1. The bank that forgot where its money was. In 1836, the United States had a problem. Too many banks, not enough common sense. The Second Bank of the United States, essentially the country's first attempt at a central bank, was dismantled because President Andrew Jackson didn't trust it. So, where did the government stash its $10 million in federal funds afterward? In dozens of small pet banks, chosen based on political loyalty instead of financial stability. Imagine handing your life savings to your cousin because he seems good with money. Within months, these banks started lending like frat boys with a stolen credit card, inflating land prices until the bubble popped. When the economy crashed, everyone pointed fingers, and Jackson proudly said, "See, told you so." It was the first time in history that "I don't trust banks" became official government policy. 2. The bank that burned its own money. In 1932, the Reichsbank of Germany faced a very practical problem. It had printed so much money during hyperinflation that citizens were using it as wallpaper. Seriously, bills were cheaper than actual wallpaper. But when the economy stabilized, the bank had mountains of worthless notes to dispose of. Their genius solution? Burn it all. So they fed billions of marks into industrial furnaces, literally watching their country's fortune go up in smoke. The best part? Locals started stealing the burnt remnants to use as heating fuel. Imagine robbing a bank, not for cash, but for warmth. Somewhere in the ashes of that fiery stupidity lies the perfect metaphor for modern finance. When the numbers stop making sense, just burn the evidence and call it policy. 3. The ATM that became a charity machine. In 2019, a Spanish bank accidentally reprogrammed one of its ATMs during a software update. For a brief, glorious window, anyone who withdrew $20 received $200 instead. Within hours, a line of faithful customers stretched around the block, all insisting they were testing it. By the time the glitch was fixed, the machine had given out tens of thousands of euros, and the bank couldn't legally recover most of it because it was their own operational error. Security footage showed one guy withdrawing over and over until dawn, looking like a Vegas jackpot winner in business casual. The morale of the story? When banks make mistakes, they call it a technical issue. When you make the same mistake, it's called fraud. 4. The gold that wasn't there. In 1937, the U.S. finished building Fort Knox, a fortress so secure it could probably survive a nuclear winter and a raccoon invasion. It was meant to hold the nation's gold, the ultimate do-not-touch pile of shiny reassurance. But here's the kicker. For decades, conspiracy theories swirled that most of the gold wasn't even there. In the 1970s, public suspicion got so loud that the government finally allowed a handful of reporters and congressmen to peek inside. The group was escorted past armed guards through 22-ton steel doors and into the vault, where they were shown exactly one room of gold bars. Just one. For all anyone knows, the rest could have been filled with spray-painted bricks and patriotic optimism. The tour was so staged, it made Disneyland look spontaneous. To this day, nobody outside a classified list of officials really knows how much gold sits there, or if it's there at all. America basically built the world's most expensive "Trust Me Bro" safe. The irony? Fort Knox has become less a symbol of wealth and more a monument to blind financial faith. The glittering illusion that our money is backed by something other than good vibes and paperwork. 5. The bank that gave out free money. By accident. In 2012, an Australian couple discovered what every broke college student dreams about. Their bank had accidentally granted them an unlimited overdraft. The glitch was supposed to cap at a few $100s, but instead turned into a bottomless pit of credit. So, naturally, they did what any rational person would do. They went shopping. Over 2 years, they spent millions on designer clothes, cars, and 5-star vacations, calling it borrowing. The bank didn't notice until long after the couple vanished to Hong Kong. When they were finally caught, the pair argued they thought it was a promotion. Because, honestly, who checks when your account suddenly starts acting like Oprah? You get a car, you get a yacht. The case became a global meme for the greatest bank error in history. The moral: banks charge you $25 for overdrawing by $1. But if they accidentally make you a millionaire, suddenly you're the criminal. Turns out, financial justice has a weird sense of humor and a terrible accounting department. 6. The bank that lost $1 billion in translation. In 2009, HSBC tried to rebrand itself globally with a new slogan, "Assume Nothing." Sounds edgy, right? Except when translated into several languages, it turned into "Do Nothing," which, to be fair, describes most banks' customer service perfectly. The error cost them $10 million to fix and forced a full rebranding campaign. They eventually changed it to the world's local bank, which is marketing speak for "We're everywhere, so good luck escaping our fees." The disaster became a case study in corporate idiocy, how a multi-billion-dollar institution can lose more in translation than an exchange rate ever could. Internally, employees joked that "Do Nothing" had accidentally become their new mission statement. Customers, meanwhile, couldn't help but agree. In the end, HSBC's blunder was more honest than they intended. A bank that charged you for inactivity, yet built its global image on it. Sometimes truth in advertising is just a translation error away. 7. The bank run that started. Because of a joke in 1910, a small-town bank in California learned that humor and finance don't mix. A mischievous customer, annoyed at being denied a small loan, jokingly told a few friends that the bank was about to collapse. Word spread faster than free coffee at a shareholders meeting. Within hours, dozens of panicked locals lined up to withdraw their savings, because nothing says trust like seeing your neighbors sprinting to the teller window. The rumor grew so wildly that the bank's own employees joined the stampede. By noon, the vault was empty, not because it was insolvent, but because everyone thought it was. The bank president stood on the steps shouting, "We're fine," while holding a bag of cash like a desperate street magician. It didn't help. The institution was forced to close for 3 days to calm everyone down. When it reopened, the prankster tried to deposit his money again and was promptly arrested for starting a financial riot. The irony? The bank was perfectly stable until people's panic made it unstable. Proof that the only thing more contagious than fear is bad gossip, especially when money's involved. 8. The banker who bet the farm. Literally. During the Great Depression, one Iowa banker decided traditional investing was too boring. He wanted to innovate, so he began loaning money not in cash but in livestock. The idea was that cows were self-replicating assets. Unfortunately, nobody explained biology or economics to him. When farmers defaulted, he tried to repossess their cattle, only to find that half had wandered off, been sold, or mysteriously died right before collection day. His solution? He opened a bank-owned farm to raise them himself. Turns out, managing 400 angry cows requires more skill than balancing a ledger. The bank hemorrhaged money faster than a busted milk pail, and within a year it was bankrupt. Locals called it the Mutual Savings and Loan. The former banker ended up working on a dairy farm, where he spent the next decade milking the very kind of investments that ruined him. The moral? Never invest in something that eats 3 times a day and occasionally kicks your accountant. 9. The bank that mistook monopoly. Money for the real thing. In 2004, a Canadian bank teller made the ultimate deposit slip-up. A man walked in with a stack of crisp, colorful bills that looked suspiciously fake, because they were. They were monopoly money. He just lost a bet and wanted to make a point by depositing his winnings. The teller, apparently running on autopilot or caffeine fumes, didn't notice. She processed the transaction and credited his account. By the time the error was caught, the bank had already issued him a balance statement confirming his new fortune of $2,700 in pretend currency. Corporate PR scrambled, blaming a visual similarity between play money and older bill designs, which was basically admitting their tellers couldn't tell the difference between a children's game and the national economy. The incident became a local legend, and the man framed the receipt, proof that even monopoly players sometimes get real financial validation. The bank quietly fired the teller and tightened security, but the damage was done. For weeks, kids were lining up outside with toy cash, testing their luck. And honestly, given how modern banking works, it didn't seem that different from the real thing. 10. The bank that lost track of time. And $10 million in 1985, a New York investment bank decided to automate its payment system to modernize efficiency. Unfortunately, someone forgot to set the date correctly in the new software. Instead of processing a $5,000 wire transfer, the bank's computer sent out nearly $10 million to random accounts, all scheduled for the year 2099. For 2 glorious hours, dozens of confused customers saw futuristic fortunes appear in their balances, spent them emotionally, and then watched the money vanish as the system corrected itself. One guy even tried to cash out immediately, claiming the Bank of the Future had blessed him. The media dubbed it the time travel transfer. When the story hit the papers, the bank's PR team said it was a minor data entry delay. Minor, as in accidentally launching 8 decades into the financial future. The incident cost them thousands in refunds, lawsuits, and humiliation. To this day, employees joke that the money's still out there, just waiting patiently in the year 2099, earning absolutely no interest. Turns out, time is money. But sometimes it's also the enemy. 11. The bank that got robbed by its own security system. In 1972, a Chicago bank spent a small fortune installing one of the most advanced security systems of its time. It had motion detectors, cameras, vault timers, the works. There was just one problem: nobody taught the staff how to use it. During a Sunday power outage, the system malfunctioned and automatically locked everyone inside, triggering an emergency vault purge. That meant it began shredding documents and deactivating internal cameras to protect assets. By the time help arrived 14 hours later, the vault looked like it had hosted a paper tornado. The bank's insurance investigators called it an act of overachievement. Even worse, the system had drained its backup power by recording its own chaos. Millions of dollars worth of records gone. The company that installed it proudly marketed the system as so secure, even we can't get in. Turns out they meant it literally. The bank later switched to a simpler system: a lock, a key, and an intern who promised not to touch anything. Sometimes high-tech stupidity is just low-tech logic wearing a tie. 12. The banker who mistook his password for a loan amount. In 1999, a British banker accidentally transferred $6 million because he thought the computer was asking for his password, not the amount to approve. His intended loan? $60,000? His password? $6,000. The money went straight to a construction firm that immediately started buying trucks, cranes, and champagne. By the time anyone realized the mistake, the firm had spent half of it. The banker tried to cancel the transaction, but the system required, wait for it, his password. The same one that caused the disaster. The irony practically wrote itself. After weeks of legal chaos, the bank managed to reclaim some of the funds, but the poor banker's career didn't survive the embarrassment. Internal memos now warn employees to never use numbers as passwords, which feels like closing the vault door after the robbers left a thank you note. The best part? The firm's owner later joked he considered the money a divine typo. In the end, that banker didn't just lose millions, he accidentally proved why humans and software should never, ever share a brain cell. 13. The bank that tried to save money by printing its own. In the 1880s, the Farmers and Mechanics Bank of Kansas had a genius idea. Why not print their own banknotes instead of ordering expensive ones from the Federal Mint? It would cut costs and boost local pride. What it actually boosted was counterfeiting, because their home-printed bills looked like a child's art project on bad paper. Within weeks, the town was flooded with fake currency, and nobody could tell the difference between real and homebrew money. Even the bank's own tellers were confused. Local stores began rejecting all their bills, forcing customers to pay with chickens and corn again. The bank tried to fix it by printing newer notes, this time in bright pink to avoid confusion. The result? Chaos that made Monopoly look like the Federal Reserve. Within 6 months, the bank folded and its president fled town, reportedly carrying a suitcase full of his own fake bills. The moral? If your money looks like it was designed in Microsoft Paint, maybe leave the minting to professionals. 14. The bank that accidentally bought a ghost town in 2003. An investment bank in London attempted to purchase land for a Western-themed resort in Nevada. Somewhere between the PowerPoint pitch and the property records, a clerk mistyped the parcel ID, and the bank unknowingly bought the entire town of Swan Lake, population 0. It had been abandoned since the 1940s after its only water source evaporated. The acquisition cost $1.8 million, which might sound like a bargain, until you realize the town had no electricity, no buildings, and no actual swans. When executives flew in for an inspection, they were greeted by tumbleweeds, coyotes, and one very confused local historian who charged them $5 for a tour. The bank tried to flip the property as a heritage restoration opportunity, but no one wanted a ghost town that came with its own pack of feral dogs. They ended up donating it to the state for a tax write-off, officially marking it as the first time a financial institution bought nothing, and then got praised for its philanthropy. Somewhere out there, a faded future investment opportunity sign still flaps in the desert wind, a monument to optimism, clerical errors, and men in suits who really should have read the fine print. 15. The bank that repossessed the wrong house. Twice. In 2011, Bank of America made headlines for foreclosing on a Florida couple who didn't even have a mortgage. They owned their house outright. No loans, no liens, just bad luck and a very confused algorithm. The couple sued, won the case, and the court ordered the bank to pay their legal fees. So the couple did what anyone else would do. They hired a moving crew and showed up at the bank's branch with a sheriff's order to repossess furniture. Cameras rolled as they hauled out office chairs, printers, and even the teller's desk. It was a humiliation masterpiece. You'd think the bank learned its lesson. But no. 2 years later, another branch accidentally filed the same foreclosure again on the same couple. The owners joked that they should start charging rent for the visits. Eventually, the bank sent a personal apology and a fruit basket because nothing says sorry for illegally taking your home like a pineapple and some pears. Somewhere deep in their system, though, that house is probably still flagged as pending. Proof that bureaucracy, once unleashed, never dies. It just updates itself. 16. The banker who invested in a pyramid scheme. Literally. In the roaring 1920s, before the Great Depression taught everyone about consequences, a wealthy Boston banker named Horace E. Caldwell became obsessed with visionary architecture. He sunk his personal fortune into constructing a 12-story pyramid-shaped bank headquarters, convinced it would channel prosperity. It did the opposite. The building's triangular design wasted most of the interior space. Sunlight baked the vault room like a toaster, and customers had to walk up angled corridors that made them dizzy. Worse, Caldwell financed the project using loans from his own bank, claiming it was a spiritual investment. When regulators found out, he tried to defend it as geometrically inspired economics. The press called it the Pyramid Scheme, and the nickname stuck. By the time it opened, the Great Depression hit, and the bank collapsed almost immediately. The structure still stands today, converted into condos, but locals say weird things happen there: flickering lights, mysterious drafts, and occasionally the faint sound of someone shouting, "It's not a scam, it's geometry," from the empty halls. History's cruelest punchline: the only pyramid scheme that was actually made of stone. 17. The bank that hired a fortune teller as risk manager. In 1978, a struggling regional bank in Louisiana, desperate for innovative forecasting, decided to bring in unconventional help: a local psychic who claimed she could predict market shifts by feeling the vibrations of dollar bills. They officially hired her as a financial intuitive consultant. For a few months, her predictions oddly lined up with actual events: a local sugar crash, a rise in oil prices, even a successful bond issue. Executives started bragging that they had a sixth sense advantage. But when she warned that dark forces were moving through the stock market, they panicked and sold off major holdings, right before those stocks doubled in value. She was quietly fired after recommending they buy silver because Mercury was in retrograde. The bank lost millions, and the story became a business school legend about corporate desperation. The psychic went on to host a local radio show called Money and the Moon, while the bank eventually merged with a competitor, presumably one that preferred accountants to astrologers. Still, somewhere in a dusty HR file, there's an official job title that reads Vice President of Vibrations. 18. The bank that buried its vault. Literally. In 1951, a small bank in Arizona decided to future-proof its assets by building an underground vault that could withstand nuclear war. Unfortunately, they hired a contractor who thought blueprints were just vague suggestions. The vault was poured 20 feet deeper than planned and accidentally sealed off without a proper access tunnel. The bank didn't realize the mistake until they tried to use it 6 months later, when the elevator shaft ended in solid concrete. For years, they had to tell customers their gold reserves were in deep storage, which wasn't technically a lie. In 1978, construction workers rediscovered the vault while expanding a nearby highway. Inside were stacks of perfectly preserved records, coins, and a 1950s calendar frozen in time, like a financial Pompeii. The bank proudly displayed the recovered cash in its lobby with a plaque that read, "Our money is safe, maybe too safe." The lesson? Sometimes the problem isn't losing your assets, it's accidentally entombing them. 19. The bank that launched a credit card war. In 1958, Bank of America tried a new idea: send credit cards to people without them asking. Over 60,000 Fresno residents opened their mailboxes to find shiny new Bank America cards preloaded with $300 credit. Sounds generous, right? Within days, people went on spending sprees that would make modern influencers blush: cars, furniture, a literal horse. But then the bills arrived, and the chaos began. Many recipients had no income, no intention to pay, and in some cases, no idea what a credit card even was. Fraud exploded, merchants panicked, and lawsuits piled up. The experiment lost the bank over $20 million, which in 1958 could have bought an entire city block. But here's the twist: the disaster accidentally birthed the modern credit card industry. Bank Americard eventually evolved into Visa, and the rest of the world said, "Hey, that fiasco looks profitable." So, the next time your mailbox fills with credit offers, remember, they're all descendants of a marketing stunt so stupid it somehow invented capitalism's favorite addiction. 20. The bank that printed too much money and blamed the weather. In 1923, the German Reichsbank was printing banknotes faster than citizens could spend them, literally billions of marks a day. Workers hauled stacks of cash in wheelbarrows, and children played with bundles like Legos. When questioned about the runaway inflation, bank officials insisted it wasn't their fault. It was the humidity. Apparently, the ink was drying too slowly, causing delays in monetary stabilization. Their solution? Hire more printers and build ventilation systems so they could crank out even more worthless cash, faster. By November, a single loaf of bread cost 200 billion marks. People started burning money for heat because it was cheaper than firewood. The bank's director claimed the economy would balance itself out by Christmas, which, technically, it did, after the currency collapsed entirely. Historians now call it one of the most spectacular self-inflicted financial disasters in history. The moral? If your solution to inflation involves buying more ink, you're not stabilizing the economy. You're hosting its funeral. 21. The bank that cashed a check from space. In 1976, NASA astronauts returning from the Apollo-Soyuz mission decided to have a little fun. Commander Thomas Stafford wrote a one-point order check payable to the first bank of outer space, a joke reference to how absurdly expensive the mission was. When he got home, he mailed the check to his actual bank in Houston. Instead of laughing, the branch manager stamped it, processed it, and sent it to the Federal Reserve for clearing. For a glorious week, the U.S. banking system genuinely believed it had transacted with outer space. The check bounced, of course, not for insufficient funds, but because no one could find an address to mail the confirmation to. The press caught wind. Headlines screamed, "Astronauts Bank does business with the cosmos," and the bank tried to turn the embarrassment into marketing gold. Their new slogan? "No account is out of reach." The framed check still hangs in the bank's headquarters, a reminder that bureaucracy will stamp literally anything if you give it the right form. Somewhere, a teller probably still wonders what the exchange rate is between dollars and moon dust. 22. The banker who sold his safe, with the money still inside. In 1981, a retired banker in Missouri decided to sell his old office furniture, including a 500-pound steel safe he hadn't opened in years. A local farmer bought it for $100, loaded it into his truck, and cracked it open back home, only to find $42,000 in forgotten cash neatly stacked inside. When word got out, the banker tried to claim it was technically a fixture, not a feature, meaning the money should have stayed his. The farmer disagreed, citing the universal law of finders keepers. The legal battle that followed made national headlines, ending with a judge declaring that once you sell the safe, you sell whatever's locked inside it. The banker called it a tragic misunderstanding. Everyone else called it karma with compound interest. The farmer bought new equipment, the banker gained a lifelong lesson in inventory management, and the local paper ran the perfect headline: "Man withdraws $42,000 from Craigslist." It's proof that sometimes the dumbest banking decisions don't happen in skyscrapers, but in barns with better bookkeeping. 23. The bank that tried to sue itself. In 2006, Wells Fargo made history by suing Wells Fargo. The situation began when one division foreclosed on a property that another division technically owned through a separate subsidiary. The lawyers filed the paperwork, not realizing both sides of the lawsuit had the same name. For weeks, the case moved through the system, complete with official letters reading Wells Fargo versus Wells Fargo. The presiding judge, clearly delighted, let the proceedings continue just to see how far they'd go. Court transcripts include moments where attorneys objected to their own arguments. When the mistake was finally caught, the company tried to quietly withdraw the case, but by then it was public record and comedy gold. The bank released a statement calling it a procedural misunderstanding, which is corporate speak for "we tripped over our own paperwork." Late-night hosts had a field day, joking that Wells Fargo had finally met its match. It was the first, and hopefully last, time in history that a financial institution managed to out-stupid itself in a court of law. If irony paid interest, this case would have earned billions. And there you have it, proof that even banks need supervision. Which disaster deserves overdraft protection? You decide.